Welcome to Lighthouse Outlook, the podcast where we talk less about the markets and more about what matters to the people navigating them. From family offices to founders, we go beyond the numbers to unpack risk, legacy, and the human side of capital. Hosted by the team at McNichol & Associates Asset Management.
All right. Good morning. July 16th already. Holy cow. Really quick update from myself with 13th Floor. They just put out a mid-year update. Was really just an update on two of their development plays, which we'll talk about. And then charts of the week is more like a chart of the week because Andrew had car troubles. So let me just update you on a couple of properties here. So this is the old shot. Basically in March of 22. 13th Floor picked up about 250 acres, just a couple of miles up the road from Greenville, South Carolina. And of that pie slice, about 130 acres will be developed. The remainder is going to be open space. And this slide here is this is the computer generated image, so it's not like that yet. But the studies provided them with the option to put in about, call it 1,500 low dense multi-res units, and there's one called Venture on the trail at 220 units that's already underway, and then the rest of the property should look as you see it. So this is Venture on the trail here. This past May they got their construction loans, so looks like about $48 million, and they're breaking ground. So this is well underway. This is also a computer generated image, and so this will be sort of Class A garden style multi-res. Pretty clean right down the fairway across 16 acres of landscaped property, and they did get a tax credit on this one, which looks pretty good in terms of the rebates. Helps the basis of the investment, and we're pretty excited. The one I'm really excited about, and if I ever became single again, I don't know how that could happen, is I would for sure move down to South Florida into this place. This is the link at Douglas Station. It's a co-development, and it's a lot like a condo I owned when I was younger. It's right on the transit line, the so-called Douglas Metro Rail station, and it's a 7.5 acre site right sort of at the intersection of Miami and Coral Gables. There's 4 towers in total that are sort of in various stages of development, along with about 70,000 square feet of retail. So this is Core. Core is the link at Douglas Station. This is the first tower. This is already delivered. So this is an actual building you can like drive to in Miami. So you can see the branding on the lower level there. I believe that's a restaurant and gymnasium on that upper second level, and then there's private residences up top. Cadence is the third tower. That one's underway and should be delivered in about 2 years. So here it is. Here you can see this rooftop patio. I would basically spend all day long up there. This looks great, and there's a few places in Toronto like that for sure. But I mean, can you really compare with South Beach? So they did secure full project financing and did get started on the fourth and final tower, which is called Crescendo. That's also the name of a music royalties fund that we own, which I kind of found funny, and like obviously in a positive way. And this is quite the building, and actually, Dave and I were down to see Arnaud a couple of years back, and you could see this project from his desk, which is pretty cool. And then so Andrew, sounds like you had car troubles. I mean, happens to the best of us. I've been looking at cars like pretty much all summer, and I gotta, the old A4 is getting along in years here, so I gotta do something as well. And then in terms of his actual report, uh, it's really this lack of upside. So remember a couple of weeks ago, like the narrative was, bullish unless the market gives you reason not to be. And maybe it is, because remember, from a seasonality perspective, I think July is one of the better months, and it's not really proving out to be that way. Not in a sort of, really robust way. I mean, it could be that, a lot of the gains were had coming out of, April and into May. And so it's not bad. It's just sort of stalling out. And so again, it's this kind of frustrating lack of follow through. He talks about the S&P 500 hitting its highest levels since June 4th a while back, and then that was kind of met by immediate selling. So there's this sort of obvious layer of overhead resistance that we got to get through. And I guess from Andrew's perspective, if you kind of go on too long without getting what you need out of the market in terms of a definitive breakout, the odds start to become in the favor of a more gnarly sell off in terms of resetting the market to the point where people get back in. So that's it for me, short and sweet.
Okay, good stuff, Joe. I'm going to observe today. Sean, do you have something to go ahead with?
Yeah, I'm just putting the finishing touches on the cartoon, and I will start anyway. Let me just share the screen here. Okay, it's a macro update for July 17th, 2026, not financial advice. Positioning now. Pardon me. We're long bias. Overall, though, reducing our exposure. This bull market is getting a little long in the tooth for our liking. But the trend right now, as we will see in the equity markets, is still higher, and we've even had a little pop in crypto. Crypto is fragile, but anticipation of the Clarity Act has given it a little life in the last few days, and we should know more today and tomorrow on that. And we see that reflected in the asset class performance over the past week. Pretty dead outside of crypto and oil. The story in crypto, people are bullish on the Clarity Act passing. And I have to say, Trump and his family will benefit from this immensely. Crypto was the largest contributor to the political action committees during the election. That hasn't been forgotten. But for crypto to really get its footing, we need to see the US dollar get on a weakening track with basically war cutting rates back to zero and US dollar debasement. The other story on this chart is oil with the resumption of the Iran war. I think the Iranians are playing the slow role in negotiations. They are watching the Strategic Petroleum Reserve just like everyone else. And this could be a big surprise in August. Economics, not too much has changed except for the big surprise in CPI being a little bit lower. PPI did the same. Now, people are thinking hard about the two hikes that were priced in. Oil has some turbulence, things are bouncing around in commodities, but oil is the only one that's kind of reverse direction. The story in the US dollar for the past year is kind of sideways, but in the, where it is right now at 100.5 is well above the average of about 98.5. We've seen that on a flight to quality, primarily due to Iran and people paying for oil in US dollars. Long term, like over the course of the next year, 2 years, we do expect a much weaker dollar. The yen continues to be weak. It's gone sideways. It hasn't broken out to higher levels yet. But as an oil importer, if we do see an extreme move in oil, we could see another break in the yen to a higher level and very likely Bank of Japan intervention. Gold is just continuing its negative trend. You can see that downward blue line. And until it meaningfully breaks above that, it's below its moving averages. We've got a ton of red on our proprietary heat map. Just not a lot of things looking good for gold, despite, a lot of jawboning by some theorists that, gold should be priced closer to $10,000 an ounce based on the expansion of the US money supply over the past decade. The same can be said for silver. The negative trend continues. I've been painfully wrong on this trade. China solar activity has not picked up to the degree that I'd expected with all of the oil trade. They still have to import about 100 million ounces a year, but that has not shifted higher yet. Oil, bombs away. Trump ended the truce on July 18th. Trading, Iran and the U.S. are trading strikes, and Iran is striking out at countries like Jordan. And this is getting to be a pretty messy situation. The Strategic Petroleum Reserve is being drained to support lower domestic prices. Rates and credit, really nothing going on of any interest here. Bonds did rally on the lower inflation numbers, but still not big moves. The S&P, we're still wondering, is this a top? We've broken above that green trend line, but we haven't posted a higher high in a little while. But we can see that the lows in the most recent month and a half are trending upwards. So, we've got higher lows, if you will. The heat map, which has worked out well for investors who follow it, is only got one red signal, and that's one of the shortest term signals. I think it's 3 days. 3 days does not a market make. The bottom heat map shows good, decent breadth from top to bottom. Very notably yesterday, there was a massive move out of chip companies, except NVIDIA, into platforms such as, Google, Meta, Amazon, Apple. It was just profound. Like, we saw companies like Cerebras, Micron, SK Hynix, Intel down 4 to 10%, and the platforms being up 3 and 4%. This is literally when pensions, institutions, sovereign wealth funds are detecting rotation, and they're selling out of one theme, which was semis, specifically AI semis, into where they can actually put billions and billions of dollars. And one of the few places you can do that and not move the market significantly against yourself when you're buying in that size is in these trillion-dollar type companies. I think platforms are going to win, and I'll talk a little bit about that later. The U.S. equity market has improved from, we had a fearful indicator. It's just nudged up into the neutral zone. Breadth is still good. The term structure, the VIX looks normal. The earnings trend is still positive, and sentiment, as I said, is neutral. In the equity regime, which I'm liking more and more, we still have a positive bull market, and it's still looking positive for the week ahead. These numbers look a little stale, but the market didn't change that much. And when you're looking at almost 3,000 days to do the calculation, you're not going to see the probabilities move too much on a week-to-week basis. But right now, it's saying the average 60-day forward returns from a bull regime would be about 3.3%. Here you can see that's the history that we're working with. Crypto. So crypto notably had a good bump in the last week in a bad market. It's still a broken risk asset. If we fall below 60,000 or 61,000, I don't see support until 45. We could have a 10, 20% bump on this Clarity Act getting passed, but there's going to be a lot of work after that. And I think that the trend will fall back into place, unfortunately. If you want to trade it, treat it as a trade until the Fed begins a honest to God debasement cycle. Here we see, we're in a bear market again with Bitcoin, a ton of red in our heat map with a punctuation of some blue and yellow showing. Those are short and medium term indicators, from 3 days to about a month. Where, I'm not betting the farm on this. The AI trade, AI has driven the market. It's just the biggest theme. We see parallels to .com 3D printing. The next leg is likely to move into robotics and physical AI. But the big news in the past week was a shop called Calibri coming out with a new inference algorithm that could take a massive model that used to only run in data centers. Like, I mean, having like a couple terabytes of this high bandwidth memory to run this model, GLM 5.2. And they were able to shoehorn it into basically what can run on a 32 gig laptop. Like, that's unbelievable. And it is a real breakthrough in how these inference models, especially the open source ones from China, may end up becoming the dominant force in AI. And then what does that do to, the forthcoming IPOs from Anthropic, OpenAI? What's it going to do to SpaceX, which is hugely valued on what they think is going to be enterprise AI? I mean, this has massive implications from a change in how software works. So small teams can have an unbelievable impact in this space. Keep your eyes on this. A few more advances in this, and we could see, like if you take a look at Cerebras, CBRS, they make literally pizza-sized chips that excel at inference. So that's not the training of the models that NVIDIA is very good at, although a company called Etched is chasing their bandwagon. But Cerebras has a great reputation in inference, and their stock has been hammered since the IPO. It's down almost 50%. The guys in the cutting edge, they're seeing what's going on and they're selling. However, as I said, even if you have a laptop, you're going to need 32, ideally like 64 or even 128 gigs of RAM to be able to run these models. So I do see memory continuing to be needed, and it's going to be needed in every single device. Like, the memory in your phone is going to have to basically quadruple with what's coming. So that's it for me. I'm going to finish up the cartoon, and if there's time, I will show it.
Sounds good, Sean. Welcome back. Hope you had a good break. And same to Chris. Chris Curry, do you want to jump in with any comments?
Sure, Dave. Yeah, and thank you. The rates market has really been pressured, I think, with, obviously the situation in Iran, the reversal of what people thought was going to be a, quick resolution. And, obviously everyone knows a reversal in the oil prices. So, rates have backed up, especially in the US, to a level where, people are thinking that potentially, this could be a top. Yep. So this is the sort of the monthly chart of the U.S. 10-year, and you can see that, on a reasonably long-term basis, this area sort of close to 5% is really the call it the panic zone in the U.S. market, where, the last time we hit that was after the Trump tariffs, and Besson had to come out and sort of calm the markets and say there's plenty of liquidity. But we've been slowly, I'm going to zoom in a little bit more. We've been slowly inching up towards that level. I mean, you can see on the weekly basis here, we're at 460. Same thing. As we get tighten the time frame even more. Back, at the start of May, we hit 466. We're probably going to go there again. But we have to ask ourselves what's going to make rates turn around again. And, I can't think of, I guess Warsh is a, his political agenda would be to lower rates, although he seems to be being given a bit of freedom here to do, what he sees fit and what the committee sees fit, which, clearly is hikes are in the cards. The market with 2-year at currently at 4.17 is implying 2 hikes. The overnight, the OIS is implying 1 hike at the December meeting. So, definitely market seeing hikes in the cards. So that's not going to help the situation. So I think it all really, revolves down to an inflation bet. And that's, really more or less of what's the direction in the Iran war. So I'm not going to stick my neck out on a prediction on that, but, maybe, I'd love to hear what other people's view on the duration of that situation. So I'll pass it back to the host now.
Yeah, thanks. Yeah, that question is really unknowable. So I've been reading the stuff that we share around. Simon Hunt is a good one, so keep an eye out for that one. He seems to be on top of things. I haven't read him in a few days now. What do you think, Sean?
Well, in Iran right now, the Republican Guard, as a self-funded army, is in charge, and I think that that's always been the situation. These guys are going to end up fighting it out. It is a country of provinces, I believe, over a little over 30, and I think some of the actions that have been taken are literally regional Republican Guard commanders taking actions of their own accord. And that was kind of the previous Ayatollah's plan, is that if he was killed, that he would decentralize war-making authority amongst these regions. Looking at the geography, there's just no way that the U.S. is going to take that country. There's getting boots on the ground, forget it, right? This is a country of 90 million people. This isn't like some backwater desert. They are a sophisticated society. They're watching the strategic reserve. They know elections are coming in the U.S. They know that the U.S. is not targeting civilian infrastructure yet, although apparently some power plants have been attacked. But people were not feeling the bite in the big cities as military targets were attacked. I think that's going to be the change. And, I've got the cartoon now. If I could
Go for it.
throw that up. Kind of on the back of my comments on this extended bull market. This is a great mimosa. Line them up, barkeep. And poor little bear behind there getting skinnier.
He's earning less and less relatively.
Well,
That's
maybe
good.
they'll
Good one.
come,
So you
but
just gave it a bunch of words and told it to do like a bull and a bear.
So
Very
you can see
cool.
that's kind of where I'm gravitating towards these days.
I've got a bunch of things to show here. Let me start with a video first. Just make sure there isn't the latest one that's come through. And it has. I think people don't really get to work until about 9:15, 9:30 now to push out content. I find it remarkable. Okay, share window. Video, toggle it on. Here we go. Okay. Some interesting data points there. Some things that Chris had already covered about the Fed and potentially hiking at the next meeting. They're going to have to do something because, as I'll show you in a moment, inflation is not under check yet. Let me go change screens here and do Michael Coolbaugh. And let me see if the morning coffee's come in yet. So just bear with me. And it has not. So I can use yesterday's data points for that. And then I want to finish off at the end. I'm going to turn off the recording for that one. I'll explain what it is at the end. So it'll maybe keep you interested.
Dave, on inflation, like a week ago, we were looking at about a 50% probability of a rate hike in the end of July. And now it's fallen by post CPI to about 10% for the next meeting.
Yeah, I just can't see them lowering rates anymore like they talked about forever there. But that's what I want to finish up with one analyst's outlook on things that I sent around. I'll share his name when the camera goes off. Okay, what am I doing here? I am going to share my PDF screen. Okay, so from Michael Coolbaugh, these are a week out, but probably going to be some similar data points as now. Slowing rate of change in the AI capex. In order to power 25% earnings per share growth every year. For the next 5 years, we're going to need a lot more debt to equity funded. CapEx or hyperscalers are about to hit the ROI bonanza. NVIDIA's valuation is cheapest since early 2019. Interesting. US dollar speculator positioning. On top of this US dollar positioning, banks are all now starting to downgrade emerging markets. Yeah, they've had a good run. Many people felt that spot rates were rising solely due to higher fuel costs, but we just hit a new multi-year high as oil and gasoline have been dropping. The tight trucking market persists. The recent wobble has done nothing to scare dispersion traders. Implied correlations slammed right back to multi-year lows. We've been raising cash. A really impressive work here by the economists. Is he being still in la la land? So that's Brent Crude. Yeah, I think he's disparaging the economists. And that's it for him. Can you see the next thing I just moved over to, the indice returns? Or do I have to check?
No, you're good.
Okay. So it does all my PDFs. Okay, so this is as of close of the 14th. Got Canada in double digits. Venture capital worst in the world again. Yeah, they can't catch a break in that. The 1 year numbers, 2 years are okay, but they're back into negative territory again, double digit almost. China barely breaking even, and India the worst of the rest. Japan's been an incredible place, although your currency would have worked against you, but unless you had a hedge on that. Yeah, so mostly green around the world. In terms of commodities, I'll do it better with the point and figure, but yeah, crude's been all over the place, down over the month and up big over the year. Nat gas has been consistently down, as has gold and silver in a big way. And yeah, copper, with all this story about AI build out and everything related to the need for copper, it just doesn't seem to care. Maybe there's just so much of it. There must be a glut of it. I haven't really looked at that equation yet. I'll do the currency and interest rates on the other side. So let me go back to sharing a PDF, and then I want to shut off the camera. Hopefully we know how to do that. Okay, just quickly with the playbook here. So once again, no change in the Canada US dollar, still points down to 70 and 62 cents for the long one. You've got there's your spot price there at just over 100, on its way to 109. So you've got to pay attention to these vertical price objectives. So it measures 10% higher from here, which is a huge swing after coming down double digits last year. Okay, that's it for currencies without getting into the weeds. New way of moving the screen. Find something new every day. Okay, crude at 79.60. It measures up. So the mathematics of point and figure state that it should go break through 100 again. It has it up 38% year to date. So those are the futures. So slightly different than just the spot price. Same thing for natural gas futures. They actually are the other way around. They measured down to 230, being down 20% this year. Still money to be made in the producers here, according to this. Copper has a slight up to $7, and it's up. I guess it's going a little bit. It's just being a slow goer here. Now jumping along to precious metals. Yeah, both of them measure down, both the futures and the spot price, and they're down almost 7% year to date. No money to be made in buying any of the new gold ones. We're just sitting on ours right here, waiting for a reversal, and we will get another kick at the can here because inflation is still a problem. They can't just sweep it under the carpet. Now the producers, look to be down for the majors. For the juniors, look to be up. Silver flat, silver producers down, and silver juniors down. So, yeah, we're going to be in a bit of a waiting pattern here. August is always a good month for precious metals with just this demand equation changes with the Indian weddings starting after the monsoon season gets behind them. No change in Bitcoin, still down 26% year to date. Ethereum down 35. Now Ethereum measures up. That's a change. I haven't noticed that one yet. But Solana down, and the index measures up. So you're getting a bit of a changing of the guard there, but we'll see. Finally, interest rates. So you've got the 2-year here over 4%, measures up to over 6%. That's moved 20 percentage points this year. And 5-year up, as Chris Curry showed, the 10-year up as well. It's at 4.5 now, looking to head towards 5, up 9% this year. And the 30-year big up to over 6.2. And that big up there for the 30-year just smells more inflation. So the media will try to say that it's not because they're getting fed that from the government, but I don't believe it. Okay, so that's probably it for all of our presenters today.
Thanks for listening to Lighthouse Outlook. If this conversation sparked a new perspective, share it with someone who thinks differently. Subscribe for fresh episodes every 2 weeks and visit mcnichollasset.com to learn more.